Hello, and welcome to the June Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. The big story in May was that the economy started to reopen, but it was what allowed that to happen that we need to focus on. We saw real progress on controlling the virus during the month, and that's what allowed the reopening. And since the reopening, things have actually gone much better than expected. People are indeed going out and shopping. And because of that, markets have continued to rise. We've seen low single digits appreciation in most of the world. And here in the US, markets are actually back to just about above their long-term trend line. In other words, there was a lot of good news during the month. But as always, we have to ask ourselves, will this continue? Well, also, as always, it's going to depend on the epidemic. And here the news is actually pretty good, but with a caveat. We saw continued progress during the month. We saw the case growth rate drop by about half, from just under 3% a day down to under 1.5% a day. We saw the testing rate double from 200,000 a day to 400,000 a day. And we saw new cases stable at around 20,000 a day. In other words, we continue to see progress on the virus, even as treatments are now moving into testing. And it's this kind of progress that let us reopen the economy. And the reopening has a positive effect in and of itself. With people thinking that the end is in sight, we see confidence stabilizing. We see people going back to work. We've seen job losses peaking and dropping down. We've actually seen thousands and hundreds of thousands of people moving back into the labor force. It looks very much like the economy bottomed in May. And that's good news because now we can start to move up again. And what we've seen from the data so far is that actually the recovery is going much faster than expected. And that's what markets are responding to. The economy is reopening. The virus seems to be under control. And the V-shaped recovery that markets have been expecting and counting on now actually looks like a real possibility. Now, that said, we're not out of the woods yet. Even though we still have seen good news on the virus, what we need to watch for is a second wave of infections. And we haven't seen that yet, but it's still early days. We might well see case counts go up, and indeed there are signs of that happening in some states. But so far, at least, the news is good. And even if we do get a bit of a second wave, it doesn't look like it'll be enough to derail the recovery. We also need to worry about whether people are going to keep growing their spending. Yes, the first couple of weeks were great, but we don't know how long it's going to take to get back to where we were. And that's going to be the real question from an economic perspective. In other words, there's still a lot of uncertainty, and the markets, just as they responded to the good news, might well respond to some bad news, and at some point we can probably get that. So we're probably going to have to watch for some more volatility, even as the news remains good. And that's the real takeaway here, though. The news is good. We're entering the summer in a good place. We have to watch for a second wave of infections, but we haven't seen one yet. We need to make sure the economy continues to reopen well, but so far, the signs are good. In other words, things are actually much better than we would have expected a month ago. And if things keep going as they are, the prospects for June is good as well. Now, that said, that's it for this month. Join me in July for the next monthly update. And in the meantime, for daily updates, check out my blog, The Independent Market Observer. Until then, stay healthy, stay safe, and we'll get through this together. Thanks for watching.